Alrighty, Tuesday now. No, yes, maybe. Tuesday now. What is? No, maybe. Good morning, Eric Doc from North America. It's another fun-filled day, so yes, good morning, good afternoon, and good evening. Well, it's Wednesday for somebody. Let's check it all out here. We see the Swiss this morning. Oh, that's crude oil. Let's switch that. You can see the Swiss on J4X right there. You can see the strength kicking up in there. That means that they're buying dollars and they're selling Swiss, which is unique in its own right. I mean, we seem to be the epicenter of the issue. Maybe not. Maybe just the whole world upside down does it at this point. It's so hard to say anymore. I mean, in other words, everybody got into debt. I mean, I'll go through my reiteration of, where we are. People go, what's he talking about? I mean, Lloyd's in London is out of business. And that's right. For a long time, us traders used to say that was like the Gibraltar of investment and so forth. I mean, it was a insurance exchange out of London. It's been there for hundreds of years. It was a combination of different groups insuring different projects, from satellites to shipping to whatever. Gone. It's only there in name. It's owned by the Exchequer. Same thing with Royal Bank of Scotland or Santander or Citibank in New York. Merrill Lynch has been merged with Bank of America. Wachovia, which I think might have been the largest bank in the United States, which was a combination of that North Carolina group over the decades, now is merged in with Wells Fargo. It goes on and on. Bear Stearns is with JPM. It just goes on and on and on. And that's the era we're in. But people, they don't talk about it. The media doesn't talk about it. The financial media hides it. And so, you start to shake your head. You try to figure it out. And then I say, maybe we're not the epicenter. Sometimes I wonder if we are. Sometimes I wonder if we're not. So in other words, when they run towards the dollar, as many times as we all think, oh, it's overvalued. It's it's over. Did I say overvalued? I did say that. Overvalued, or over loved, or it can't stay this strong. In the end result, the dollar is just the dollar. It's the dirtiest shirt in a laundry, or it's the cleanest shirt in a laundry of dirty shirts. That's all it comes down to. We are in the least amount of debt when it comes to the percentage of our country. And so, out of all the countries in the world, which is kind of odd when you see all the trillions that we're in debt to, you start to wonder about Greece or Japan and so forth, China. All of them are in greater debt than us, which is hard to explain since the media and so forth doesn't talk about it. And so it's always a confusing thing. So anyway, that's why I say, wow, look at that. The Swiss is going up back to the top end of the range. They couldn't even go down and touch the bottom end of the range when we went into that weekly sell here. We went into the weekly sell here. We expected to see it try to go touch the bottom of the range. It got there within 5-6 days. It got halfway down there, did the 50% out from here to there, and the next thing you know, it stalled. And they started to buy dollars again. And they're talking crazy in DC to begin with, so you got to wonder, why would you buy that crazy country's currency? But they do, because we're the least in debt compared to everybody else in a percentage of our overall size, and so that's the confusing part, and that the rest of the country sees that, and they reach in and they, who's the biggest bondholder? Every time over the weekend when I'm with friends and we're drinking and we're having conversations, and I go, they go, oh, well, China owns, $1 trillion worth of bonds. And I go, huh? Okay. And so does Japan. And then they go, really? And I go, yeah. And Europe is over halfway there. They're like 5 or 6 or 700,000, 6 or 700 billion in U.S. bonds. And they go, really? Well, who's the biggest bondholder? And I said, people sitting here. And they go, what? They go, yeah, Americans own almost 50% of all American bonds. So we control over half of our debt ourselves. And I can say that you don't see that in those other countries, where they can say, oh, well, we control half of our debt. No, more than likely the Federal Reserve owns a lot of it. So anyway, we go back to the simplest thing, a pairs trade, and we look at it and we go, That's what Doc's talking about. And then, you know, as an intraday trader, you go, well, who cares? I'm just intraday trading. And I agree. I totally agree there. I'm right there with you. But anyway, there we go. There you can see here, it's going up to the top end, or going to the top end of that range we've been following for a year and a half. And you can see here on J4X doing the same exact thing, marching up. You can see the white line piercing up through the dashed, and you can see the green hinkies emulating our, you know, 5 dots there. Same game, you know. The only difference is this is much slower. It's a couple hours behind, whereas our mathematics is, in my opinion, is the most advanced. You know, when I try to compare it to any other from the Market Technicians Association around the planet, my math is still the most advanced. And when we put this together for J4X, the Market Technicians Association claims that this is a lagger. But when we put MACD and so forth, which is supposedly a leader, the tools that we've put together on the J4X is much more advanced than the MACD. So I like to always say that this is an advanced leading indicator. So since the MACD is allegedly a leading indicator, then we can say that when we put together a slow stochastic against a fast stochastic, it's even more advanced. And that's where we are. And then when we look at the hinkies, it gives us a flavor of our dot system. And you can see it emulates it pretty well. And so if you don't have Doc, you have this. You know, it's J4X is not bad compared to having to put up with the rest of the public indicators that are out there. This is the best combination together. So that's where we are. Now let's go over to the chat line. Doc has gotten that off his chest because, boy, some of the conversations here is crazy in America right now. I mean, just insane. You got to wonder, you know, who's in charge? There's a, I guess it's the vice president was being, I guess the big news today in the States is that the vice president was being bumped or I guess disrespected by the president and the media and the rest of the congressional people, and they wouldn't let her stand near the president, and then they didn't announce her when they were being introduced. They skipped over and announced somebody else. There's a movie or TV show called VP. They say it's identical to what they're doing to the Vice President of the United States. So we're seeing a lot of crazy stuff here this morning, and I guess that's why I'm starting off looking at it with a reminiscent type of way of looking at it. Pre-QE, before Mr. Obama and the era of QE. We're looking at this and we're saying, wow, you know, things are definitely weird. Definitely weird. All right, so there you go. You can see the Swiss moving up. So that means the dollar is strong. Let's check her out with, we'll take a look at the euro as we take a sip of our tea. Now the euro also showed some real weakness. Right there. And I was a little surprised last night when we sent out the charts. It was like, wow, we're really putting pressure on that. I mean, in the morning we were flirting with some strength, and you know, we talked about, I think it was, I forget who asked yesterday. Remember yesterday, this was plus at this point during our webinar. See that little tail there? Right there. That little tail right there. It was plus. We were talking about, you know, where could this go? Someone asked, where could this go? I said we went and squeezed the euro on the J4X, and we put a weekly up there, and we said maybe 108, you know, because it was starting to break down by the end of the webinar. It was showing weakness, and you could see the weekly rolling over here. You know, the whole bit was going on. It was like, wait a minute, we're watching this happen live, and you know, we were at one. Was it almost one? We were heading at 114.62 or something like that. Now we're trading at 113.67. You know, almost a full 93 pips down. You know, we were like, well, it can go down to this area. You know, they said, what do you think, Doc? Where do you think this could go? And I said, well, the way it's acting, it could go back down to the 108s, which is a real surprise because see this here? This is the white dots there. Let's contract that so you can see it on the Chicago quad. This was a range that established itself over a year ago. this range had been bouncing, caroming like a billiard ball or a snooker's ball or wherever you want to figure out what it is, or like an Australian football, bouncing from one point to the other and then bouncing back again. But now it's look at it, it's having its issues. It's really making a quick dash down on the downside. So and then we're coming to the end of the year, and with taxes and all that other stuff forces decision making in the financial universe, in which you take profits in some things, you take losses in others. And I guess maybe there's a lot out there that are taking losses in the euro. So that's pretty much the name of the game there. And so when we scrunch that back to the wideness of now, you see we are down and chasing like 6 or 7 or 8. I think it's like the 1.5 lows we're going after at this point. And you can see our weekly is not very friendly towards it. It keeps on pushing down. We've been in that weekly sell, since where's that at? Right here. We'll make the whole thing go up so you can see it like that. So we've been that week. It confirmed the close of the sell. Whoa, didn't do that right. Let's try that one more time. There we are. And so in that week, this is a daily chart, somewhere in the 1700 to 1600 something, we went into a weekly sell. And we've bounced up it a couple times, following the Bollingers, I guess you could say. We put the Bollingers on there for somebody out there that likes watching Bollingers. They asked for it, we left it on there. And you can see it went to the top of the range of the Bollinger. You can see Doc's math was ahead of it by a day. You see we major spiked up through and started turning down. You can see our mathematics, which again is ahead of the curve of the Bollingers. And you can see we started to dip. I guess you could say we started to dip here. We started gliding down, making lower lows, and then it was a lower high here, and then has been sinking into the south side of it all. As you can see here on the Bollinger, this price range is gliding down it. And you can see here ours, our histogram is below it, which is the real telltale, and then you can see the stalling out in here, which gave it a shot to try to climb up yesterday and failed. And we'll see if it even can get through a zero line. And then when you look at it through our weekly time manifolds, or which is like the Bollingers, you can see it broke down and it doesn't care. It doesn't care. It just keeps on breaking down and just drop it and drop it and drop it. So here we go. Middle Ages there. I closed half my 330 bean meal position at 633 yesterday. Doc made some nice profits. We'll let the rest run. I hear you. Matter of fact, it's up a little bit today, right? Yeah. And that was that great article that you and Robin and I looked at about the idea that by February, March, there could be some real explosion in that sector. Well, since we've seen, here on Dukascopy, they follow soybeans, and we've seen soybeans go from like almost 14 down to 12. But we see that grain complex overall locked like a lock on a door, holding up very well high. I mean, we see red wheat, we see white wheat, we see corn, and we see a lot of other products like the soy oil and so forth, all much firmer. Now meal is catching up. So it's supposedly the logic of that article was that there's going to be a meal shortage in Brazil, and I guess that will press on the world, and I guess that's what we're seeing right now. AR, how you doing? Hello, Doc. Thanks so much because of the euro going down, as you said. Yeah, you were the one that made us take a little deeper look at it yesterday. I think that's really good, and that's the most important thing about questions. With traders asking questions, is that some people look at people asking questions as a challenge, like, hey, you're dumb and you said something stupid. But we don't look at it here. We look at this like an electronic trading pit. We see it all as one big conversation. And so when someone says, oh, I think euro will be 118.9 or 119.5. It's like, okay, let's take a look and see. And we go look and see what you or whoever said that, and we see what what possibly would give you that idea, and then we take a look at, some other idea, and then we try, it's in a market, and the end result is it's a marketplace. For every buyer there's a seller, for every seller there's a buyer. And so you have to have conviction on one side to do the other. We used to say on the trading floor, if you don't bid, you can't buy. And if you don't offer, you can't sell. It's the same thing here with ideas. If you don't tell people what's in your, what you see, then we really can't ferret out. We can't really explore what is going on in a subject, a product. And so it's not that anybody asking or telling on this is challenging. Instead, what it is that we're starting to explore possibilities, and it's really better. You can't believe I can tell you a story, and let's see. I would like to know about silver oil, and sure. We had a guy on the trading floor as we go to those things, and we'll take a look. Let's take a look at silver to start off with. We had a guy on the trading floor. We used to call him Rambo, from the movies, the Sylvester Stallone Rambo, because he could walk around for days talking about a particular position he was going to put on if this product went to that spot. And you're walking around the trading, on the exchange floor, and you can see the tape, and you can see the products up on the tapes all over the floor. Those tapes that ran at the top of the ceilings, and you would see, and then you'd see like that product that he was talking about, that Rambo was constantly rambling about, and next thing you know, it did what he said. And by the next time you got over to that side of the trading floor in that trading pit, you had the conversation like, so did you get short? And he said, he'd be like, oh yeah, I'm gonna get short, like big numbers, dramatic numbers. He'd be like, okay, cool. So we get over there, I'd walk over there like, maybe an hour later or 2 hours later after I was done trading on whatever side of the floor that I was trading on, and I'd say, so did you get short? And he said, yep. I said, are you still short? Nope, I'm long now. I said, what? For 3 days you've been telling me you're going to get short there. I did. I got short. I made 35 cents, like 35 pips, and it turned on me, and now I'm long. Now, he didn't say one word about being long, and that's why we used to call him Rambo, because he could pull the trigger. And, in other words, he could do that. He could get it done. And at the same time, he could change gears. He could go just different directions. After talking about it for 3 days, showing you charts, pointing them out on the charts, he'd be like, look at us, look at us, look at us. It's like, okay, I see it, I got it, Rambo, I get it. And he was like, yeah, I'm getting short there. I'm selling, back in the day when you sold 10,000 shares of something, that was a lot, They used to be special blocks. You traded 10,000 shares of something, it was a special block. It wasn't just like a normal trade. It was it went on the tape as a special block. It was actually reported as a big block. They called them big blocks. And he'd be like, I'm selling 20,000. I'm selling 30,000. So it wasn't like in these days where you sell 30,000 and nobody even notices. In those days, in the 80s and the 70s, it was a big block transaction that was reported all over the place. It was a special block that went up. That went up and traded. And he would be talking for days doing it. Next thing you know, he did it and make some money. Didn't like the way it looked. Next thing you know, he's on the opposite side. Half the time, he made more money on the opposite side of his own trade that he talked about for 2 or 3 days. So that's why I am always here talking about that. Okay, now you can see here's silver. There's silver on the Chicago Quant. Let's take a look at it also over on the J4X right there. And silver's looking a little firmer again today. It's been consistent now. What do we got? 2, 4, 6, 8. We're on the 9th day and a buy. That buy is really cool. Went into the buy in the 23 close of the 23.91. We are trading now at 25.27, so over $1 higher. We've been in a weekly buy since the 24s. You can see that week of the 24 where we were as low as 23 with a low of 23.03, and by the close of that particular week we were as high as where were we? We were as high as 25 on it? Yeah, I guess so. We were as high as 25. By the end of that week, we went into the buy somewhere in that area. You can see the line was shooting up through it, like from the first day on. And we put the marker at the close of the week to show that it, confirmed the buy. And so it's been an interesting product that's gone down and challenged it down this way. It's gone back up again, going back into a buy. That's a nice big winner chicken dinner from that move there. And we're still in, actually we're in the move. We're still in that move. And I think yesterday I was on my, oh, you like the Pitt Stories middle age? Yeah. Yeah, that's Rambo. At one point he left Philadelphia and he went to Chicago, and I think he had Yahoo or Amazon. And him and a couple other guys, they were like the #1 trader in that stuff when it was like, $90 a share, or I think it was Amazon. And ran to 200, fell down to like 100, and Susquehanna bought it from them for like $3 million. So they just sold their opportunity to trade it as the specialist, as the #1 trader in it. And, and then they started a tequila company. But they were floor traders for decades, so they still trade every day. Yeah, some floor guys bought the Chicago Red Sox, not the Red Sox, White Sox at one point too. Yeah, that's the way we are, traders. We do all kinds of things. So anyway, that's me sipping tea, and that's that conversation there. So I guess, if nothing else, we talked about silver over the last couple of days and weeks. We are surprised. I'm surprised. I can't believe this thing is not trading at like 34 or something like that, or 33. I think yesterday we actually talked the Fibonacci of it. It should be in the 30s at least. I don't understand how they keep this thing down so low. That's the Federal Reserve, playing games, trying to make it look like there is no inflation, when in fact, what do they call it? It's transitory. So here we are 6 months after, what was it? They said it in late May, right? Going into June in the meeting, they called it transitory. So all of June, July, August, and September, there's 4 months. It's transitory. Jackson Hole didn't happen. They canceled Jackson Hole just so that they wouldn't have to talk about the transitory inflation. So what is it? So June, July, August, and September, October, here we are halfway through November, and it's 6 months, and now they're starting to kind of like, don't worry. Mrs. Yellen came out yesterday or 2 days ago, and she said, nah, it might get a little bit higher, but I think it tops out in 6 months. Now it's topping out in 6 months, the inflation, but silver should be so much higher. See, AR says you look at the weakness in silver. Yeah, I blame the weakness as the Federal Reserve. That's the only reason, because Robin and I follow the physical market also. And physical silver right now is trading at about $36 to $37 an ounce. So it's trading 33% higher than the futures contract does. So they can play those games with the contracts on the exchange floors, but they can't play those games in the physical market. So I agree with you. I think it looks weak as a product. If I didn't know what it was, I'd be like, ooh, it looks like a failed Head and Shoulders here. Because remember, that's the Head and Shoulders thing we've looked at. We wrote an article about it on that 5th Head and Shoulders. This one seemed to get some strength in it. That's why those lines are there. Every Head and Shoulders has failed, except this one. So I guess you could say, if nothing else, the bottom end of the range is 22 or 22 and a half. And it could be literally that low there of the 2304, where we went into the daily buy. Didn't mean to pick those two together, but it just happens to be that way. And maybe we're figuring that at least it challenges this top part of the range, which is like the high 26s. Maybe they'll let it go as high as 26 and a half to 27, and then they'll sit on it again. And you know what? We're like I said, we're watching the physical market, and the physical market, they're not happy about those numbers. They're trading this stuff. You want to buy physical silver? They're out there trying to hawk it to you for on the small quantities at $30, $35, $36, $37 an ounce. I mean, literally $10 higher. I'm worried about inflation and want to take refuge in gold and silver. Well, unfortunately, on paper, gold and silver don't do it. Only the physical seems to do it. If you bought silver, 6 months ago, at the 24, 25, and 26 area, you can go out there and sell it now in the mid 30s. But you can't do that to the exchange products. That's the torturous. That's what makes us all crazy on some level or another. We know this is not real. We know this physical market is so divergent, like in the movies, divergent from the physical market. So, what was those other products you were interested in? Let's see, oil. So let's see about silver, oil, and CAD. Let's go take a look at crude oil. There's the December crude, and you can see it's jumped into the daily buy yesterday. We're a little bit higher today. We're in the weekly sell for one full week. It doesn't seem like it's really jumping at all. Maybe it's just going to be sideways chop for a little bit in here. Play in the 80s to the higher 70s. And let me just show you what the back month, the contango, looks like, which is really a surprise. And that is that the June contract, right, 6 months out, look at that. It got down into the 73 area here, 72 area. No more than a day ago was at the 73 area, and it's back to 75. And this thing's trading $5 discount to the spot right now. So that's kind of surprising in its own right, especially when I was mentioning yesterday, there's talk that somebody went out there and bought the strike price of $250 on oil, like 1 year out. $250. Wow. What kind of panic is that? Now, I'm not talking about the buyer. I mean, we could go look up the option, but I would say that 2 years out, 1 year out, $250 strike. That's got to be like 3 cents. Yeah, it's got to be dirt cheap. Like $30. And if this thing even remotely explodes to say 150, there'll be a panic. That thing will be trading at like $1. That'll be like 3 cents to make $1. That's a monster return. It'll explode to $1 easily. So yeah, I mean, inflation has got. Look, we know one thing for sure: we can't stop Mr. Biden's stupidity for at least another 12 months. Okay. You got to figure that by this time next year, the Republicans will have a supermajority in the House and a strong control of the Senate. So what he does between now and then, there's a good reason to be concerned, as you say. Do you say concerned? Do you use that word, or you're worried? No, either one is correct. Let's see, let me feel that weakness. Let's see, I am worried. Yeah, worried? Yeah, there's a good reason to be worried. Because between now and next November, 12 months from now, what he can do to the financial community and to the inflation, I've seen good economists that I've been following for 30, 40 years now. I know I don't sound that old, but for 30 and 40 years now, their analysis, which is a lot of times pretty good, they're talking 10% inflation this time next year. So, yeah, add me to the group that's worried. I'm with you. I'm worried too. I'm right there with you. Let's see. Then it is likely to continue and rise after a correction of the oil. I don't know. Some people out there are buying calls that are way up there on the strike price. So yeah, something's got some people scared. Look, I mean, if you're a good fund or a trader and you put out 3 cents or 5 cents to own, some wild dirt cheap options, and oil goes up $70 or $60, even if it goes up to like 130 or 140. Are you kidding me? Those options are going to explode. They're going to explode. They're going to, they're not going to just double their money. They're going to, square. It'll be a square root to it. It'll explode. And so that's probably what's going on. At one point, when people get panicky like that, in the marketplace, when they, we always used to have here's another one, a middle age, you'll like this one. We used to say on the trading floors, when you can't sell what you want, sell something else. Or vice versa. If you can't buy what you want, buy something else. So in other words, you're trying to buy a stock or a commodity or a currency, and you can't get it because it keeps on going up in price. and you keep on bidding on it, and it keeps on going up in price, and days go by, and you still haven't bought it. Well, usually the old philosophy was, well, if you can't get that Forex, or you can't get that commodity, or you can't get that stock, go find one that's a lot like it and buy something else. And then it starts this like chain reaction, where all of a sudden they start reaching, because they reach to buy, but they may not be getting what they want, but they're going to reach for something because they got to have a position on. And so that's what that buying calls at the 250 strike price is all about. Is that they're starting to reach, thinking if it explodes, that 3 cents could be 30 cents. I mean, imagine you're paying $3, or in this case it's $30, and it goes to 30 cents, and now it's trading at $300. So you paid $3 for it, now it's trading at $300. 10 times its value. So, that's what that whole mental, how do I express it? That mental, that's the mental idea of it all. What did they used to be? We would jump into gold and silver, but the Federal Reserve and central banks around the planet are sitting on the product, and they make it hard to take delivery, and they only let certain people take delivery, and the whole bit, and it's just like they make it very hard, and so then the physical market doesn't match the. Oh, aren't we losing? We've lost the London spot market. Isn't that closed, or it's officially going to be closed by February or something like that? I mean, they're definitely like the Lombard rate. They're shutting things down because they can't be delivered. Yeah, that's exactly what it comes down to. Good point, middle age, and that's how it works. You got to have something. So the Refuge, buy the physical. Stocks, that's why stocks are strong at the moment. In the beginning of inflation, people buy stocks because companies can raise their prices. So they're passing it along to the customers. And so that means that their earnings are going up because they're able to raise their prices. So in the beginning, companies' stock are a refuge. And then after a while, the inflation outtakes that. The economy goes into recession, and then the stocks are sold as it's going into recession. So in the beginning, the refuge is stocks, and that's why you see stock markets every day stronger and stronger and stronger. We'll take a look at them in a few minutes after we finish off going through all our everything else. Okay, so let's see. AR wants to see, what was the last one? Oil, right? Did we do? No, we did oil. The last one is Canadian. So we'll go back to the currencies and take a look at Canadian now. Let's put it up on J4X. So there's the Canadian, and we are a bit surprised of the way the strength is kicked out in the Canadian. It had that wonderful look, like it was, heading south. It was doing some good selling, and then all of a sudden, you can see here we jumped into the weekly buy last week. You can see it's holding up. We sold down on Monday. It seems to be trying to come back. We got a couple red dots. You see we're flirting with the daily sell as we speak at the moment. So this is just digestion. In other words, it's just correcting itself at the moment. We'll see if this is going to follow the weekly trend. When it went into a sell here, you see the trend overall develops to go down in value. Then something like a daily jumps up and then pushes it again down, and a daily jumps in again, and we start to see the rise of the green line in the histogram now on the weekly signal, and we're doing that right now. You can see the strength, and now it's getting through the time manifold right there, the yellow line on the plus side. So this might be just, and that's the 50 percentile we were watching on the Fibonacci of all this. So now that's become the support, bouncing between that and 0.618, and we're going to see if this thing keeps on starting to climb to the top end of the range. So that's what the Canadian looks like it's doing. Let's see. The most important thing for a trader is to know when to get out and when he or she sees a bubble. Right. Exactly. And when you need to get out, you'll reach for whatever it is to get out and close the position, and that's the most important thing right there. Let's take a look at the Turkish lira. Oh, did we look at cable? I don't think we looked at cable. cable's flirting with a daily buy. Let's look at that real quick. Yeah, see that cable is reaching up. It's trying to get into the daily buy now. You know, but our weekly is down, so this is just like a dead cat bounce. That's all it is, really, is a dead cat bounce going on. What else can we say about that? That's about it on the cable. Take a look at it real quick on J4X here. Right there. And then we jump over to Turkish lira real quick. And I hope we've explored enough with the Canadian. If not, we can look at it even closer if you want. But right now, to me, with it jumping through the weekly, I'm just going to show it to you again. It says to me that that this weakness that's occurring, I'm not too comfortable with that. I think it, because of the way the weekly is, if this, especially with it up today in a red dot and trying to get higher, if it starts to take out Friday's close, this thing could really start to get some legs on the upside. With joining in with the weekly. So that's something to keep an eye on. Let's see where we go from here. Oh, Turkish lira. Let's see what that's doing this morning. In many ways, that could be really insightful, the Turkish lira. Just watching the way it responds and acts. Sometimes some of the weakest products can be very insightful. So you can see there, they are like, okay, I didn't even know where it was today. I was just making that statement, because I'm seeing the strength in the dollar. So what it does is it accentuates it in something like this. So today's high is 10.25 now. We must be going after the 12 in the euro Turkish lira at this point. And we keep on saying, I don't know why I keep on saying 12 and a half, because I haven't done any mathematical calculations to justify it, but they're 1166 and a half today. They're just taking this stuff up, which a weak product, something very weak, sometimes can get really distorted, because it doesn't have the buyers and it has the sellers. And so in this case here, we've seen a Turkish lira go from the 1.5 area to the 11.5 area. Wow. You want to talk about inflation? That's an explosion in inflation. Let's see. Oh, Middle H says Aussie. Yeah, let's check out the Aussie. Aussie, I think, on the fact check screen. Where's that fact check screen? I think I saw it. The Aussie kind of caught my eye last night when I was putting the numbers in. There it is, right there. Yeah, that's it. Went into a daily buy. I saw that. We're in a weekly buy, and yesterday it went into the daily buy. See that there? That caught my eye yesterday. Right there. Still holding up for a second day. And oh, I see. Yeah, that's the interesting thing, is it's the weekly is trying to go into the sell at the moment. It's been 5 weeks in a buy since back in here, right there, and it ran up. Now it's run down, and the sell protected you, and now we're in a daily buy right there. Let's put that in. And it seems to be holding in there, and if this starts to turn back up, the weekly does, I don't know, I guess they're going to put pressure on it. Now this is, I guess it's an Aussie dollar, right? So it going down is strong against the dollar, I guess that's what it is. And now the fact that it's going up, it's weak against the dollar, I think that's how that plays. Something like that. AR says, with so much money invested in the dollar, it is possible that the dollar will strengthen in the other currencies for a couple of months. Yes. And you know what? It's not as much as how much. It's probably more the fact that it has staying power. In other words, I mean, sometimes the old expression on the floor, they have more money than God. In this case here, we are the least in debt relative to our country. So America, in many ways, is an island, and I always like to quote that Japanese general, that the commanding general of World War II, when they bombed Pearl Harbor, and everybody was excited and happy at the headquarters where they were discussing it and watching it, and they said, okay, we've done a great job, and he said, no, and they said, well, what do you mean, General? And he said, all we've done is woken a sleeping giant. And that's the whole thing, is that America, as much as it's in debt on the size of the debt, it has the power to climb out of its problems. And that is the magic of it all, is that we're able to close our government, or stop our government from being stupid. And so, at this point in time, as much as we have I don't know what you want to call him, I guess I could call him a fascist, because everybody on the left to me are fascists. So he's some type of fascist, socialist, communist dreamer of some form, and he's in charge of the country right now, or he's in the executive branch. But the people are speaking up against him, and we're changing things peacefully, without guns and bullets and bombs, And so that's, as much as I agree with you, it's the dollars, but it's not the way a lot of people understand dollars. In other words, a lot of money. We have the ability to change things in a peaceful way and stay in continuity. It's kind of like that example of World War II, where we were manufacturing some crazy number. At one point, we were manufacturing over 50% of all the products in the world. We manufacture right now 25% of all the products in the world. That's still a big number for a country that's only 300 million people, or under 400 million. It's 8 billion people on the planet, and we manufacture 25% of all the products in the world. So that's really productive, and that's when you can say, that's how it fits the money statement, AR says, which country would you seek refuge in case the bubble bursts? U.S. probably, because we're an island. In many ways, we can manufacture cars, we can manufacture food. We grow, 25% of all the world's soybeans. We grow something crazy like, 25 or 30% of all the world's corn. We're only, what are we? We're under 400 million people out of 8 billion. So we're not even 25%. 25% of the population would be 2 billion, right? So we're like, I don't know, we're like 8 or 9% of the world, and we manufacture all those things, you know what I mean? Oh, wait a second. I'm seeing something about J4X. So when you look at the numbers, you don't have to be as concerned in the States. Now, I would assume that most of the Commonwealth would function the same way. That's the way I see it. That's exactly what I would assume. The Commonwealth, it can distribute, because of the trading opportunity. There's almost 2 billion people. A quarter of the world is in the Commonwealth. And it has good trading links with the United States. So, and you have the Commonwealth north of us. You have Canada right north of us. And they benefit from being, location. So, that's probably another reason why the dollar is strong. And it makes no sense it should be, you think, why the hell is the dollar strong? But when you're only like, 12% of the world or 8% of the world, and you manufacture 25% of it, well then obviously you have extra. So there's not much that we don't have. Matter of fact, Mr. Trump had us a net exporter of natural gas and oil, and then Mr. Biden shut it all down. And it would be nothing for us to go right back to that and be the world's largest exporter in oil too. So, maybe we're number 2 or 3 in gold in manufacturing. We're number 1 or 2 or 3 in silver if you put Canada and the United States together in the same situation, and Alaska. America is since we the people control America more than the politicians do, as much as the politicians like to pretend that they control us. Then it's a pretty safe place to be. I hope that answered your questions. And so I would say you go to a Commonwealth, invest in a Commonwealth, invest in the United States. I imagine Europe would be like the third place to go. there's probably pockets of other little countries that are linked to the Commonwealth or the United States that are probably safe to be connected to, that type of thing. Japan's a good example. Taiwan is I think the scare in Taiwan is overrated. Yeah, I really do. I think that Taiwan would do a hell of a lot better. You can see China's in really deep debt, enormous debt. They have enormous problems financially, especially now that we're not, propping them up. The United States propped China up. China didn't prop China up. America props up China. India gets along with the United States very well. We have a strong Indian community in the United States, and business-wise, it's linked very well to India, and it's a Commonwealth country at the same time. Yeah, I would think that there's positives in India at the same time. It may be a laggard because of some of its social policies, but it's still a Commonwealth, so there's opportunity and support by the other Commonwealth nations. So, let's see, Middle Age says, could you look at corn real quick? Sure, let's take a look at corn. And where did we leave off? Oh, we left off, okay, we got most of the currencies done to begin with, so that's pretty good. Let's go check out corn. Let's see, not there. Corn, I saw up this morning. Let's see, where's it at? Right there. Let's check out the corn. All the corns are very firm. We follow, what are we following? We follow December corn, March corn, and we have September corn, I think. We're watching September corn right now, too. So there is deck corn. You can see it's about unchanged today, right there. Actually, that's the 16th. That's yesterday. So let's fix that. Right there. It's still showing the 16th. All right, what's up with that? Let's go over to another corn real quick. Where's the March corn? Let's see if the March is showing us. Maybe it just has to make a trade and it'll straighten out. There's the March corn. Yeah, see, March corn right there. You can see just a little quieter. So I'm sure deck is the same way, and deck may update itself. Let's see if we give it a refresh. Right there. Still not doing it. Let's see. Let's try to fix it. Let's try 24/7. See if that does it. There it is. Okay, so you can see just a little bit down, nothing major, but looking very firm with our indicators right there. You see that? Been a daily buy since here. What else can we say about it? Let's go check out the September corn. Boy, I tell you, I look at all the crops around here, and you can see Sep is lifting firm. It's pretty much unchanged right there. All of them are looking strong. It could feed into that the meal situation, All right, let's take a quick look at South African Rand. I know that I try to compare the metals with it all the time, but one thing is for sure, and that is that it's not as strong as I would think it should be because of the way the metals are being bought. So it's probably telling us that the central banks are really pressuring the metals complex. And so the South African Rand realizes that gold and silver are not going to make that big a move, and so it's basically stuck. Instead of it driving back down to the 14 in the Rand, it's hanging out in the 15s. And in the ruble, obviously because of all the craziness along the Polish border and the Belarus and all that other, and Ukraine, that's probably putting pressure on the ruble. And you can see we went into that weekly buy last week, and you could feel the pressure that it's being pushed on after 12 or 13 weeks in a sell. It's taking nothing for them to get them right back up to where they were before they went into the sell, which was the 74 area right there, where we went into the sell up in here. And it's doing its best to find itself back up in there. Then the yen, which I would think is a very strong haven, for inflation. You can see the firmness here. It's been in a daily buy since right there. It is flirting with the weekly sell at the moment. We'll see if that survives by the end of the week. It's playing right with, you can see just hanging right on the edge. So, all right, what else we got to look at here? Oh, last one, Mexican peso. Peso has been reflecting a lot more weakness. It must be the inflation and the issues that are going on. Also, just Mr. Biden is not a very positive for the, it's giving money to the cartel, the criminal side of it, and Mexico itself is being punished by that. You can see here we went into a sell, but this week we're pushing even higher into the weekly buy again. You can see that strength there, daily buy right there, and we keep on seeing this range being challenged to the point where it looks like they're going to go take the top of that out. So, and that's the conclusion of the currencies as we do them. If anybody wants to see any other currency, you're welcome to. And we can take a look at the stock market. You can see here the S&P 500 up 275. Oh, you can't see that. Let's do this. Here's the intraday chart, and we're going to put the S&P up there on the J4X there. Right there. So you can see the S&P 500 firm, and you can see here on the intraday, we can make that bigger so you all can see it. You can see it's not up a lot, it's only 2.5 points up, but they're not willing to sell it, that's for sure. Every time they sell it down, they find a way to go up. You can see here on J4X, it is trying to make a dramatic bounce out of that. And then when we go over to here, is that it? Right there, we look at ours on a daily, I think it's 2 days in a daily buy. So it's doing the same bounce. Let me see, where's that? Right there. So it's doing the same bounce right there. Did its bounce back here. You see on Friday, went into the buy and it's holding up in here. And you can see there's the daily, and the weekly's not letting go. It's been strong on that aspect there. Then we go and take a look at the NQs, which is on the J4X. That is the Tech USA Tech 100 Index. That's the top 100 NASDAQ stocks, which is now the powerhouse of our indices. The Dow Jones Industrial Average has 5 or 6 of the S&P, the NASDAQ stocks in it now. So ever since ICE bought the New York Stock Exchange, it's not an independent exchange anymore. They've merged some of the NASDAQ stocks into it. And as you can see right here, there's the Tech 100 right there. It went into a buy yesterday. It's a little up, I think, not much, but a little up today. Right there, you can see it's plus just 3. See it right there, up 3. Oh, you can't. Let's do this. There it is. Up 3, up 4 now, 4.25. And so you can see that strength. And then when we go back and look at it on the daily, like we're doing with the Chicago, with the J4X, you see how the line's coming through. In this case here, we've been in a weekly buy for 6 weeks back at this point, and now the daily is joining in again after the little sell-off that we had. Let's see, where do we go from here? Here we look at the Dow Jones Industrial Average, the grand lady of them all, which now has NASDAQ stocks in it at the same time. And we'll first take a look at it through J4X here. Right there, there's the Dow 30. And then you see it's trying to do its bottoming thing. And then we look over on the Chicago Quant. Where's it at? Right there. You can see it's trying to get going. It's trying to lift right there. That's the 16th, yeah. It's trying to lift through it. You can see it's trying to lift up there. It was in a sell here. Had some red dots, just like we have it over here on J4X. Right there. And then you can see the weekly's holding up. We've been in a weekly buy all the way. Here's show you. We've been in a weekly buy since back here, since this bottom here, and it's gone from what 34,000 and change to 36,000 and change, and holding up. And you can see we're trying to get back into a daily buy there. Let's see what else do we got going on. Let's take a look at it on the intraday basis. Right there, you can see we are. What are we, unchanged? No, we're up 61 points. See that right there? Up 61 points. So it's trying to lift. You can see our intraday showing lots of strength. And it has climbed from the 35,960 area to the 36,080 area. So it's jumped, over 100 points in the last 2 hours. So, what else have we got to say? Anything else, traders? Seems like we've done a good, thorough job today of trying to understand the world markets and where they're at. I thought this was a very, very good conversation. Conversations like this every day will only make us more money. That's the only way to look at that. Deep, clear, clean questions and ideas, and trying to explore which one is possibly the more dominant and the more accurate one. And sometimes Doc's right, sometimes Doc's wrong. It's just the way it is. And that's pretty much it. And for middle age, you can see the corn doesn't seem to want to let go. I think just a wild statement here is that I think everybody has sold their crop. I really do. I think it's the same way with red wheat. I mean, we've seen red wheat go from 7 to like 8.25 now. We've seen oats go from 4 to 8. So I think everybody has sold their crop, and when they try to buy more, there's none to be had. And I would say that corn is probably the same way. What was the contango? Let's go back real quick. Just a quick question mark just popped in my head about your question. So we've got September corn trading at 561, almost 562. Let's see where December corn is. 62 versus 75. So it's only 13 cents higher in the spot right now. So that's telling us that there's a little desperation to own that stuff in the front. And then let's take a look at it in the March. Where's it at? March. Just a quick look at March. Right there. Look at that. March is trading at 82. So it's 20 cents higher than September. Doc, you have a T-note? T-note? T-bill? Oh, can you see that? No, you can't see that. That's right. You can't see that. There you go. There you go. Do I have a T-note? What's a T-note? I'm going to start singing, but I usually get out of here at this point. T-note. Try to throw something on the line and tell me what a T-note is. A bond. Do I have a bond? A Doc bond? No, we don't sell Doc bonds. That would be fun. That would be so easy. I could create synthetics all day long. No, we don't do a T-note. We create synthetic bonds. I'm not a big fan of buying bonds. What I like to do is I like to create synthetic bonds. This way you don't get trapped. Problem with outright bonds and notes is that when the bonds move, they can take off incredibly powerful, and I can get the same return synthetically doing it through options. So it's a lot easier. You create like these binary structures, and you can create synthetic bonds, which is much cheaper, less risk, and you benefit the same return of income, if not better. So, all right, happy trails to you until we meet again. Happy trails to you, to all our trading friends from Dukascopy and J4X and Chicago Quan and the world. But you see here, there's the contango. March corn at 82, September corn at 62. So both of those are a new crop. I guess you consider March as an old crop still. So they're still desperate to own the old corn, physical corn right now. Let's see, bond. Okay, dude, thank you so much. No problem, AR. Catch you around. See you around in cyberspace.